What's going on, people? Back with a bang. This is the Money Management, back here to bring you guys another market recap. So we've had 4 trading days this week, and tomorrow is Friday. So in advance, I'd like to say happy Friday to all of you guys. But of course, as you guys would have seen today, the stock market rallied for the 3rd day straight. Now, this is funny because, well, we're going to get into it. This is funny because yesterday there was an FOMC meeting and also Biden spoke, and the general consensus was that the interest rates were going to be raised and that the market would tank. Now, that is exactly what happened, but little did we know the market would rally straight after. So, obviously, yesterday was a very strange trading day. That was Wednesday. But like I said, we're going to go into a few different things today. We're going to look at a few stocks we trade in Discord, some stocks to look out for going forward. But we're going to discuss briefly whether this might be the bottom of the stock market right now. And of course, we're going to discuss some plays going into next week. Now, before we do that, I'd just like to say, I would definitely appreciate if you guys could drop a thumbs up on this video. These videos do take a lot of time. Right now, I just came back from a game and I'm straight on to making a video. So I definitely appreciate you guys dropping a thumbs up. Also, make sure to comment, share, and subscribe if you're new around here. So, as you can see on this article, US stocks rallied for a 3rd consecutive day as investors warmed up to the Federal Reserve's long-anticipated move to hike short-term interest rates for the first time in 3 years. So, basically, interest rates going up was supposed to be bad for the market, right? But as you can see from this article, it's basically saying investors warmed up to it. So, they accepted it in a way. Now, first thing I'm going to start off with is SPY, right? SPY, which yesterday was at 425, managed to hit 441 today. That is a 16-point increase. So, funny enough, in the Discord, and I'll throw it on screen, I did mention at one point, SPY to 441, and that's exactly where it ended the day, 441. So, I'm going to show you guys this. So this is yesterday, right? Wednesday, dropped off to just under 426. It went to 425 briefly, and then it rallied, right? Now, as you can see, it stagnated around here. And then this right here, 2 p.m. is when Biden started to speak, and that's where it dropped, which is kind of expected, which we all kind of expected. But the rally that happened after to close out Wednesday was not expected. Now, let's go into trading view so we can look at some charts as well. Okay. So, why I said we should go on trading view, because I want to find out and I want to get you guys' opinion on whether this is the bottom of the stock market right now, or well, what's just been happening in the past couple weeks or so. So let's first zoom out a little bit. Let's look at the daily chart. Now here, pay attention to these pink lines. These are my support and resistance lines. So I had a support line around 420, right? And let's just zoom in a bit. SPY hit that level a couple times in the past few weeks and then rose up again. Now, the funny thing is, right, obviously there's this outlier here when it dropped because of the news of Russia and Ukraine going to war. But the funny thing is here, we have been bearish for so long now. So long. Like since December, we've been bearish. But now we're starting to rise again. And 2 things I want to point out here. One, this rally since the war has been announced and war has been in play or whatever, was pretty unexpected. And the second thing is, this level around here, I'd say this maybe a little bit lower, 416, 417, seems to be holding well. Now, a lot of people think if it break below that level, we could be going down to the 400s and then even less. And I do think that's the case. But right now, as we're seeing, it's not really breaking below that level. So could this be the bottom of the market? I don't know, potentially. I'd just like to see SPY have some more green days as it's been having and then keep it up for at least a week period. So let me show you guys why and show you guys exactly what I mean. Here we go. So this is the weekly chart. As you can see, it's pretty much green, red, green, red, green, red, green, red, green, red, green, red. It's still uncertain, so don't forget that. But like I said, I'm definitely interested to see if we can have a few green weeks in a row where we finish the week overall green, as in we end the week higher than when we started. That would definitely be interesting to see. Okay, now let's move on to a couple of plays from the Discord this week. I'm going to start with today's banger, which was Apple. So we got into $160 calls with Apple. And let's just look at today's chart. These ended the day bang on in the money. It rallied throughout today after a pretty shaky start, right? Ran up to 159, see that level of 159.98, and it tanked all the way to my level of support, and it bounced and just rallied throughout the rest of the day. Now that was great for us because our $160 call has ended in the money. And I know there's people who held on for 100%, 150% returns. That's good for them. But sometimes 30%, 40%, 50% is all you need. And that's exactly what I did. But what I want to highlight here is Apple shares anywhere around this level, 155, 156, that level. I'll definitely look to buy some shares long term. If you can get it cheaper, like you could over here, 153, or even 150, that is the ideal price point. Just a couple of days ago, it was at $150. That's an ideal price point for buying and holding long term. Remember last year when Apple was 120 and I said buying shares at that price was great? Well, if you bought shares at that price point, you'd be up, what, 20, 30% already by now? That's a good sign. And I think the same thing around that $155, $150 level between there is a good price point for buying shares. Okay, next up, we're going to go with UPST. This one we called out in the live trading lounge and also on Twitter Spaces. So both of those are absolutely free. UPST was a pretty simple trade, right? So it popped out the gates, ran up hot, and continued trending above all these moving averages. Now, when it pulled back, I'm going to look at the 5-minute chart because that's what we used intraday to make this trade. If you look at the 5-minute chart, when we pull back to this level around 111, and we consolidated around here, it was showing signs with the volume of bullish momentum. Now, as you can see, it was back to back to back green candles, and we were above all three moving averages again, clearly bullish, and ready to run back up to highs of 118 before selling off back to around 116 to close out the day. But this was a pretty simple trade. As you can see, all the candles are paying very close attention to the moving averages, trending nicely above them, paying respect to them, and continuing the rise. So that's one kind of thing you need to look out for. We had already discussed UPST yesterday, and today was the day we decided to get in. Now, I do want to highlight none of this is financial advice, so please just be careful with your positions. But UPST is also a stock I like for a long-term buy and hold. Well, like I said, we made nice gains off UPST, and that's going to bring me on to my next stock, which is PayPal. Again, I like this for buy and hold long term. Anywhere around the $100 price point is good for buying stock and shares. But look at PayPal. Respecting the moving averages nicely, trending and bouncing along them, continuing the uptrend. So PayPal, another stock that we discussed yesterday, was around $104, dropped down to $103 very briefly. And of course, that would have been an ideal time to get in. But still, when it was around $105, we just needed to break out this little range, which we did. And I mentioned that $105 calls is what I was looking at. Now it's at $112, and I think my level to look out for with this one is 118. And I'll show you that right now. So we zoom out, there we go, 118.29. And we still got plenty of room to run up. So if you think you missed the run up, don't think that. PayPal, $118. Once we break that, that's when I believe that the stock starts to rally even more than it has done. Check the chart. It's just been steadily uptrending, and I like it right now. I definitely like PayPal. Okay, next up, we're going to go with Snap. Let me show you why. It's a similar one to PayPal, slightly oversold before. The RSI shows us we're now at 57, which is pretty ideal, I'd say. And if you look, just please ignore the supply and demand zones for now. I'm just still learning those. But if you just zoom in a little bit on Snap, you can see it's doing similar to the other stock I just talked about, UPST and PayPal, paying close attention to the moving averages, bouncing along those moving averages nicely, and steady on the uptrend for the past few days. Now, of course, with this market, a lot of things are running right now, which means, yes, it's a nice time to get into call options, but you've got to always manage your position, be careful with your trades, and of course, make sure to take profits on time. You never know when the market could switch, flip at any moment. But PayPal, my level to watch is around 34, 32. So if we can break above that, you see that's the level of resistance here. If we can break above that 34, 32, I believe we fly. So that would definitely be looking to get in on that one. And I'd say, see that's level right there. And then my next level will be 34.95. So that's some good levels to watch for PayPal. Once it breaks this $35 course, pretty close to the money, and we could be on our way. So one thing I wanted to highlight, right, is in this market, there's going to be a lot of twists and turns, as you guys have seen. Just like I said, yesterday with SPY, we had the meeting, and you see how it just tanked. Hold on, where are we? 16th of March, here we are. We had the meeting, it just tanked to these levels. Went from 434 all the way down to 426. In fact, even lower, 424.92 at one point. And then before you know it, it rallies again. And these things you cannot predict. So you got to take every single trade with conviction. You got to be focused. You got to understand what you're doing. You got to understand the risk you take on. You've also got to calculate the risk to reward ratio and make sure that each trade makes sense. I mean, people who trade Tesla, you guys know about this. The stock can swing any which way very quickly. Look, just in a few days, from 839, 840 down to 760, then back up to 870. It's like you can't be holding on to things too long. People that got into calls here and then held on too long. People that got into puts anywhere here, held on too long, and it's up again. So you've got to always take that in consideration when you trade, especially in this kind of market. And now the last thing I'd like to say is, if you can trade in this market, you can trade in any market. And the smoother markets, when the market actually picks a direction, it's going to be extremely beneficial for you. So that is mainly it for today's video, guys. I hope you did enjoy it. Please make sure to drop the thumbs up. Like I said, these videos do take time, and I just rushed home, made this video, and then uploaded it straight away. So please do drop a thumbs up. As always, come and check out the Discord. We do free live trading there every single day. And you guys know the stock up starter pack is there. 10 videos for you guys. You got access to those for life, so make sure you guys check out that as well. Feedback on that has been great, and it's been out just over a year now. So thanks a lot for watching this video. That is it from me. I've got money making, you got money making. See you guys next time for another video. Peace.
Game over.